Live from the Real Asset Queen studios in Kalispell, Montana, this is the Real Asset Queen Live, the one and only show about connecting people, process, and money. Each week, you'll hear mind-blowing interviews from top industry thought leaders, as well as actionable tips and strategies that you can implement in your finances, business, or investing life. Please welcome your host, a former healthcare executive turned entrepreneur, investor, and efficiency expert, Michelle Kimbrough.
Hey everyone, welcome to the Real Asset Queen and Merry Christmas. This is our last episode of the year and we have a very special guest back with us. He actually kicked us off earlier in the year. We have Stan Galver with us and we're going to be talking about, have we been naughty or nice? And are we going to get this Santa rally that everybody talks about every year? And what the heck is a Santa rally? Because I know what that means to me, but it may mean something different to Stan. So we'll get his definition and then his insight. Stan's got over 20 years of Wall Street trading experience. Great guy, terribly knowledgeable, and and he is the portfolio manager of a Swiss family office, and he is the founder of Apex Bull, which is a platform that helps traders learn how to trade. And I would recommend checking it out. He's got some great stuff on there, and his guidance. I don't think you ever sleep, Stan. I think you're always you're always in the chat.
Well, thank you. That's a very kind introduction, and thank you for stealing my fun fact. Actually, I just you're absolutely right. We were the first one to kick this year off. I remember the first pilot, and now we're wrapping it up. The 2022. So thank you for having me back. It's my pleasure. Regarding all these Santa rallies and everything, I'm actually spending my Santa rally in New York this time. I'm usually in Miami. So that's why I'm wearing a sweater, just to be in a more holiday spirit. And but unfortunately, I don't think we're getting much good news so far with the markets. And it's by the looks of it, we're going to have a very interesting 2023, to say the least. Basically, what I've been seeing so far this year was all about the inflation, and the Fed was absolutely late on the fact that they were talking about transitory inflation and all of that, which turned out to be a complete nonsense, as the Fed usually has, not usually, they do have one of the worst track records in predicting anything. And this time around, they're actually being overly aggressive with the monetary tightening, raising interest rates, which affects your real estate. For example, when you get a mortgage, it's instead of 2 to 3% that we were paying for a 30-year mortgage, now it's about 7%, which is double. So your payments are essentially not double, but much, much higher. So that's causing a slowdown in the economy across the board, because it's not only about real estate, it's borrowing cost for businesses. So coupled with the inflation, which eats away at the purchasing power of consumers, so they consume less. We now also have higher costs due to money being more expensive. So when big businesses have to borrow money, now it costs them more. And again, the prices rise, and it also contracts the economy. So unfortunately, regarding the Christmas rally, we did not get the Christmas rally because markets are starting to realize that even though the inflation might have peaked, the next year is going to be all about the earnings. And contraction of earnings, contraction of the economy, and that's why we're starting to see a lot of companies laying off tens of thousands of people, be it Google, Microsoft, Amazon, or pick one, and they're all cutting staff, and they're preparing for economic winter, so to speak, a recession. A lot of these pundits on TV for some reason, believe we're not in a recession. I think we've been in a recession this whole year. It's not, but the economy is still huffing and puffing, uh, relatively okay, which is not going to be the case next year when it's actually the high interest rates, as it has a lagging effect, will start actually have effect on the economy. So
Yeah,
next year. Mhm.
it's interesting that you said that you feel that we've been in a recession the past year. I 100% agree with that. Um, and we have the stimuluses, we have the student loan debt that was in deferment, we have mortgages that were in deferment. So people the last year or two have had disposable income, right? Because they haven't had to make those payments, they've been deferred. And so I think we have artificially inflated the economy when you look at goods and services because, yeah, people did have more money to spend, right? But as we start to see those come to an end, like you're saying, next year, it's going to be a slaughterhouse. And I think we're going to see more companies laying off not just a few hundred or a few thousand, but like we saw Amazon, 10,000 people. I think we're going to be seeing a lot of that because they're going to have to do something because the price of goods is still high. Interest rates are still high. We just had another 50 basis points. What was it, last Friday or 2 weeks ago? So, there's a lot of interesting monetary policies that are going on. And I think the real litmus test is going to be 2023. So I agree with you, Stan.
Absolutely. And just to give a brief history lesson as to what's been happening to viewers, it's basically we've been postponing this recession for several decades. We started printing money aggressively in 1990s, and then we had the tech bubble, which collapsed. So instead of allowing capitalism take place and work itself out, we bailed everything out by printing more money, and we postponed it, and then we got the real estate bubble of 2008. So instead of dealing with that issue, then we again printed money, and again we postponed the major real the way capitalism works. Basically, once it's creative destruction. So once bad entities and malinvestments fall apart, people who are capable pick up those assets and build something new and better with them. But we did not allow that to happen. So we propped up zombie companies, from banks to corporations that we bailed out. And so now we've had an everything bubble, culminating with the COVID. Coupled with the COVID, we printed 25% of all U.S. dollars in existence were printed in 2020. So more, which is ridiculous. That's why we got the inflation. So now there's a culmination of all of this, and this time around, Fed cannot print money anymore because we have inflation. So that's the dilemma they're in. So they're basically damned if they do, damned if they don't. So if they keep on, if they ease off from raising interest rates to make economy be more accommodative towards the economy, the inflation will keep on rising, and it will kill the economy. But raising interest rates also kills the economy. So they literally are out of options, and they caused it themselves. So we're gonna have basically we're gonna have to pick the poison, and the poison they've picked is better off to not have inflation to obliterate all these savings completely. As you've pointed out, people had at least some savings in 2021, 22, but they're barely scraping by. And they actually track those statistics of well, banks track statistics of the savings rates, etc., and they're pretty much all-time low. So people are living on a credit card debt, which is also increasing due to higher interest rates, and it's a snowball effect. And that's why it's going to be all the soft lending that the Federal Reserve has been talking about, and that comes back to their credibility when they were lying about the transitory inflation, which obviously was not transitory, and everybody saw. Anybody who went to a store saw that the price of X was this amount, and all of a sudden it's double or 50% higher, and keeps on going up. You don't need to be an economist to realize that something is off.
Yeah.
So, but these people who are getting paid top dollar and supposed to be in charge are giving us this nonsense about the transitory inflation, and so now they're giving us the nonsense about the soft landing, meaning that they're going to engineer, a small recession. It's going to hurt like a little prick, but it's not going to be too painful.
Yeah.
Kind of like the doctor who gives a kid a lollipop while he does something,
Yeah.
with a needle. But no, that's not going to work. It's actually the this time around they're out of options, and 2023, like you've pointed out correctly, will be the culmination of all these things. So, which again should not be cause of panic, because for people who are prepared for for this type of environment, they can find great opportunities. And this is exactly how the 1% gets richer. Actually, they pick up assets at discount, pennies on a dollar. So people who are actually uh, saving money and have access to capital, they will be able to have deals that you will only see once every decade or so. So
Yeah.
think about picking up assets in 2008, after 2008 crash in real estate, et cetera, et cetera. So similar situation. So
Yeah.
I know you have a couple of projects going yourself yeah. So if you want to briefly mention them, well, yeah,
Yeah, and you're right. This time it's different, and there aren't any options. We can't bail industries out anymore. Maybe they might try. Who knows what they're doing? But I like what you said, that they lied to us, because any normal person, like you said, could go to the grocery store and realize the cost of goods is up, and they also lowered the volume content. I noticed that on canned dog food. Used to be 15.2 ounces. It's now 13.2 ounces, but they raised the price. So, these are things that you have to pay attention to, and they are out of options. There is nothing else that they can do, and it's not going to sting like a little prick. I think it's going to hurt a lot of people, because they're not prepared. These are the people that go to work every day and are still on the belief 40, 50 years ago, that you save money, you put it in a retirement plan, it's there when you retire, and those days are gone. And I think the people, like you said, that are really going to come out of this next downturn well are those that are prepared, and they're liquid, and they're looking for those opportunities. My background is alternative assets and real estate, and we're seeing the market turn on that. There's defaults on commercial properties. We're seeing rents go up. Of course, we saw residential real estate, what happened to the prices with that, and not only in the United States but worldwide too. They went through the roof. So this anomaly is going to create a lot of opportunities, and you're right. This is where the one percenters get even richer, because all the people that I know that are in the investing space, they have been parked on the sideline waiting, and they have been selling assets and properties for the last couple years, because if you've been in a couple cycles, down cycles, like you and I have experienced, it's coming, and it's very cyclical. So we're on a 10-year cycle. Here we go again. So, and like
exactly.
you, we're prepared, right?
Exactly. And it's unfortunate what's going to happen to a lot of. I think maybe a few of them are listening. I actually have a friend I play tennis with, and he's in his late 50s, and he introduced me to his son, who is finishing high school. He's 17, and he introduced me to a bunch of young kids, young bloods, who are in their 20s, and it's very interesting how their mentality is completely different. It has shifted from being an employee to being doing something for yourself, instead
Yeah.
of being literally slaving away for a wage. They realize, you know what, I have nothing to lose. I'm 20 years old. Might as well just build something of my own. It's gonna suck, but in 10 years, I have a shot. The upside is not capped. Where becoming just a working stiff in their white collar corporate job is no longer an answer. Plus, we have probably an oversupply of college educated. Thanks again to the federal government that guaranteed student loans, the which allowed schools to jack up the prices to the idiotic proportions, right? When it's
Mhm.
100 grand, because it doesn't anyway. So with everybody going to colleges, nobody is actually working with their hands anymore. So the electricians and plumbers of these worlds right now actually outperforming all the college educated middle management types who are working mindless jobs in cubicles. It got a little better, I suppose, with COVID. Now you can work remotely, but yeah, I'm actually was pleasantly surprised at the younger generation. So there's still hope for America. We we have a younger generation that is waking up, thanks partially to YouTube, but to shows like yours that are they have access to people who they wouldn't otherwise have, because where would they have an access to somebody who's a generation above them who was successful? We don't hang out in the same places, but thanks to social media, this is one of the few benefits of social media, I suppose, where when you seek out knowledge from somebody who has experience, you can be very educated early on, right now. And the younger generation, I was again pleasantly surprised, taking full advantage of it. So they're waking up to all the negative sides of our the control system that is in place right now with the woke politics and all that stuff. So I'm really excited. That's actually very exciting to see that it's the young blood of this country is actually doing much better than I guess their parents are. So
That is like super exciting to hear.
yes,
You
I was
know?
pleasantly surprised myself.
Yeah. So let's talk a little bit about, we're closing out the end of the year. We're going to be entering into a new year here. I don't even know what happened to us last year. It was I don't know, it was a landslide or something. But there's a lot of moving parts right now as far as information and markets. So, what are some key pieces of information that you think, as investors or traders, we should be looking at, whether that be economic data, markets, whatever? What should we be tuning into for clues in the news?
Right. So obviously well, not obvious to somebody who who is in it. I think the peak of inflation is the narrative that has been dominating the market since November. That the inflation has finally peaked because we were raising rates most aggressively since 1980s. Basically, we started doing something we haven't been doing for 40 years, and investors who were actually positioned with their wealth managers who would put them in the safety like bonds in the 50-50 or 60-40 portfolios, they actually did very poorly this year, and because the price of bonds collapsed as they are priced inversely to the yield. So I don't want to get too technical, but with the peak of inflation, which is a welcoming news. Like I said, we're going to have a contraction in the economy, so that's going to be the dominant theme of the corporate earnings in Q1, Q2 of next year. That's going to be the dominant topic, I suppose. And like I said before, these things will offer opportunities for smart people. You don't have to invest 100% of your money right away, but the Warren Buffett model, you buy a good business that is not going anywhere, like Coca-Cola, which will be discounted. I don't, and I'm I don't have I'm not affiliated to Coca-Cola, and I'm not suggesting you should be drinking their products, but the fact is, certain blue chip companies will be discounted with overall markets, and if you want to park your money or invest into something which is blue chip, which is not going anywhere, you're going to be able to pick up those assets uh, with a huge discounts. And again, some people opt out for real estate, some people opt out for stocks, some people opt out for buying out businesses, etc. Or you can do a little bit of both. And So looking out for investment opportunities next year is going to be something I will personally be looking at for the next 5 years out. And I think we have not seen the bottom yet in the stock market. I think we're gonna still have one major move down, and that's gonna be that's what most people should be looking out for. They should
Mhm.
look out for a major sell off. It's gonna be mayhem and in the news and all of that stuff. But at some point, it's gonna bottom. And interesting statistic is I think stock markets bottom and start rising 3 to 6 months prior to when the actual recession ends. So they start because markets are future pricing mechanisms. They bottom out much earlier. So once you see, and we're already down 30 odd percent everywhere. So if we go down a little more, I think the that's going to be a very telltale sign. Uh-huh. Once you start seeing that the market is not basically stop bleeding, you might want to start, even though it's going to be scary. And that's actually how markets work. When you have news, financial news and otherwise, basically saying the world is over, we are all going to hell and all in handbasket. That's actually when we probably are very close to the bottom. Same thing on the opposite side has happened when my grandpa was talking to me about Bitcoin when it was at 60 something thousand. I'm like, if my grandpa heard about Bitcoin and he's actually talking to me about it, that's the other side of flip side of that same conversation. So yeah. So once you start seeing an overly pessimistic conversation on the media, to the point where you're gonna think that the world is that's it, it's done for. That's actually gonna be probably somewhere close to the bottom, and you might want to have to start keeping your eyes out on opportunities because people will be panicking. They will be dumping their assets pennies on a dollar, and you will be able to you don't have to obviously buy everything, but if you pick one or two things that are solid and you can hold them for 2 to 5 years, you can profit handsomely and you will secure your future, and you'll be holding again assets. So come inflation or any other trouble, holding an asset is how rich people become richer, because the price of assets get priced in according with the inflation as well. They absorb it well, right? So the price of the real estate and blue chip companies will keep your money safe and make you money on top of it years out. So that's the little trick. So yeah, keep the eye out on the economy by listening to the news. When it gets overly pessimistic to the point where you think that the world is over, that's when probably we'll see the bottom. And I think we'll see the bottom somewhere towards the Q3, maybe to Q4 next year or something like that. So
Yeah,
um,
that's what I'm thinking with the real estate market cycles. I think we're still probably a good solid year before we see that, um, you know, um, you know, completely break. And I know Mitch is on here, and we have many conversations about this. And we're watching, the CMBS data, and we're starting to see, telltale signs, crumblings in the commercial space and multifamily.
Mhm.
So I think knowing where to look for that information so that you can be on top of it and not CNN headline news, because I don't think that's a reliable source. But going to the source of truth that is collecting this data can help prepare you as well. And as far as trading and investing, it is not a quick rich scheme. It takes time, it takes tenacity, thick skin, studying. That's why I love Apex Bowl, because
Thank you.
I mean, you really help people understand charts and trading and what to look for, rather than just, throwing money and hoping for the best, which brings me full circle around um, my two favorite topics. One, not so favorite, but I am a precious metals buff. So I'd be curious to get your stance on that, physical, not ETFs. And I'd also like to know what you think is going on with crypto, because we had some interesting stuff with FTX and, you know, uh,
I got you. Right, right. Actually, so what happens when the Fed overprints their money and overstimulates the economy? Malinvestments happen, and the FTX is a perfect example of malinvestments. So basically, Wall Street was sitting on too much money. They're giving that money to a 25-year-old kid who has no idea what the hell he's doing, and his right arm, his girlfriend was running the hedge fund, and she was 22 when she started running billions of dollars. She worked 1 year on Wall Street as a junior something something, uh, and now she's running billions of dollars. It's a little preposterous, but these malinvestments happen specifically because Fed over stimulates the economy, and they create all these artificial boom and bust cycles that we unfortunately have to deal with. And so that's actually the whole story is perfect example as to why we should probably let the markets control the interest rate policies, not a bunch of old men sitting in an ivory tower and making decisions. Because and not even businessmen, more they're just academics pretty much, so which haven't done anything but uh, being bureaucrats all their lives. So with gold, I'm actually probably have good news for your listeners. I think that the gold has finally stopped bleeding because gold was trading opposite of the interest rates, and since the interest rates are starting to uh, the rate rises are not as aggressive anymore, and we're approaching the terminal rate, meaning somewhere where we're going to stop raising interest rates. The gold is actually now trading opposite of the dollar. The dollar is going down, and the gold is starting to get some traction. So, um, with gold being a safe haven still, now that the economy is actually going to be entering into a more aggressive recession, people will be buying more and more gold. So, I think gold will see 2000 and above pretty soon. And again, with the world economy and the world conflicts, with the disconnect of BRIC countries is Brazil, Russia, India, China, completely they're bonding together to not do trades in US dollar, which is
yeah,
our weapon basically. And they are starting to price they are essentially commoditizing their currencies by linking them to gold or oil, like in case of Russia. So the central banks are scooping up a lot of gold right now because you can't beat a 5,000 year old track record, right? So it's there for a reason. We think that we're smarter than every other generation before us, but 5,000 years says a lot, and we can. A lot of these people can say, "Oh, we're in the digital economy, so gold is irrelevant," but that's utter silliness because, like I said, maybe more than 5,000 years, right? Um, so, and that brings us to crypto, where it basically was overhyped. Um, it wasn't a digital safe haven as everybody were hoping it to be, and now it's in big trouble because FTX collapsed, and now they're looking into authorities are starting to wake up and see that there's a lot of shenanigans going on underneath, and they're looking into other big crypto exchanges like Binance. And Binance supposedly, since they print those tokens, I don't want to get again too technical, but they say they have when they release their paper, they say that it's completely backed with a 1-to-1 ratio with the U.S. dollars. And but now that everybody's starting to ask questions, they refuse the audits. They refuse show that they do have that amount of money equivalent in the U.S. dollars. So they basically giving you funny money and they don't have anything to back it with, or they have not enough to back it with, which
So
is a
they're
great business. Which is a great business.
it's brilliant, right?
It is
But
brilliant.
they're giving you funny money for funny money, right?
Yes, and
Because I
that's
I don't want to be holding US dollars either.
right. You actually bring a very valid point. So it's funny money against funny money, but
Yeah.
some funny money, I guess, a little funnier than the other, and that's what we're seeing with crypto. Hopefully, we were gonna see some institutional players still come in, and they will create a narrative through the media channels where the crypto is going to be the greatest thing since sliced bread one more time, so they can accumulate around these prices and then unload it at 5x 10x multiples in a year or two. So hopefully that will allow a lot of people who are stuck in the 40, 50,000, $60,000 range in Bitcoin, for example, who were buying the at the top of the hype last year. um, they will be able to at least get out at break even or a little profit. But after that, I don't know. It will get a little sketchy. So if you see those break even prices and a little bit of profit on top, I would suggest at least uh, not being as aggressive with your allocation for now, and see how it shakes out. Because with all the regulation that is now going to be coming, since the FTX, one of the largest exchanges, and these Sam Bankman Fried being extradited to the United States, he's going to be spilling a lot of dirt, which obviously nobody wanted to hear, because he was a very large, the largest political donor to one party, and that party is in charge now, and they don't want to give the tens of millions of dollars, if not $100 million, back. So they unfortunately they were dragging their feet for a month and a half after the collapse, and this guy was sitting in a penthouse enjoying margaritas instead of being in jail. And it got into the point where everybody's like, what's up? This is just, where's FBI? Where's our government? This guy literally stole and uh, tens of ten, over in whatever he stole or misappropriated, let's say, embezzled in the tune of $10 billion and or more, and our government is not doing anything. And that just shows also the state of affairs in our country land. But anyway, so with crypto, I think we also haven't seen the bottom yet. I think there's going to be a final flush out, because there's a lot of people hoping that we have seen the bottom with the FTX collapse and everything like that. But I think we're going to have one more push down, and that's what institutional players do. If they're going to walk in, they will want to basically kill off the Michael Saylors of this of the crypto movement, which were they've been buying billions and billions and billions of crypto, and the average price is around 20 or 15K. So they once those people, big position holders, will get stopped out, because the margin calls, they're gonna start getting margin calls, since they weren't buying with their own money, they were buying with the money they borrowed. And those that's the margin call they will be getting, and that's when they will start dumping the we haven't seen the flush out, when
Yeah.
they completely dump onto the open market their holdings, and the price collapses and then quickly reverses. And once you're going to see that quick, for example, it goes from 15,000 to 5,000, and then the next day it's at 12,000 or something like that. That's going to be your telltale sign that we are at the bottom. And you can probably pick up those assets uh, uh, for some type of trade. But again, then who do you trust? Because FTX was one of the largest crypto companies in the United States, and they were American. So everybody assumed, why am I going to hold my money with somebody outside of the United States? Because this is American company. It must be the U.S. government must be watching over it, and it's probably safe. And it turned out to be a complete joke, and it was just a bunch of college kids basically running it impromptu, winging it. and they got in trouble. So they're just like little kids who got in trouble running a big business that had no business running to begin with. So
Yeah.
not a complete fault of their own, but yeah. So
Yeah. Well, I mean, again, a good case for, real assets, right?
absolutely, absolutely. So well,
100.
with the gold, coming back with to the gold, so now everybody's realizing what digital assets are, and the gold is starting to shine again. And I think it's gonna 2023 is gonna be a very good year, specifically if we're gonna have again some troubles in the economy. People will be opting out for gold again, and all the hype that was digital gold, Bitcoin, and this that. It was not a store of value because yes, gold might have went from 2000 to whatever 1600, but it didn't go from 60,000 69,000 to 15,000, right? So it didn't lost 75-80% of its value.
Right.
So
Right.
right,
And, right now, I love silver, for a lot of reasons, equally as much as gold, but the gold silver ratio is actually very favorable for silver right now. And silver's still cheap right now.
absolutely, absolutely, absolutely. And they call it the poor man's gold, but don't feel don't let your ego get in the way. I think if you don't want to be uh, buying gold, if you don't want to allocate as much money towards gold, you can. The silver is actually probably the smarter play
Hmm.
for people who do not wish to allocate too much or who do not have a lot of money to allocate towards precious metals. And I think, but you're absolutely right. There's silver to gold ratio and it's one of those times where it's super distorted, and when the distortion happens, the price of gold will be appreciating, but silver is going to be playing much faster catch up to
Yep.
the upside. And I think all-time high gold was 1900 to 2000, whatever. Silver, we're still not even close to the all-time high. We're I think with half the price of all-time high silver. So if gold is going to start pushing highs again, silver will double in its price. So again, if your dollar purchasing power is getting eroded by inflation, and you can double that amount of money with the silver, so that means probably not a bad play.
Yeah.
While everybody else around you just keeps on losing them purchasing power with every year.
Yeah.
So absolutely agree about silver.
Yeah, 100%. I'm going to open it. I know some people have been posting comments and questions. Thank you so much, guys. But I am going to open it up for some questions. And while I do that, so type your questions in the chat box. Stan, where can people find you? I have Apex Bowl, but you're in a lot of different places.
Yeah,
So
so
where can
we've
we find you?
decided to. I just recently opened a proprietary trading firm where we provide money to new traders. Basically, most people who start on their investing journey, they are trying to turn the $1,000 into 3 quadrillion in a matter of 3 weeks, and and instead of actually being consistent with their trading and where they're investing. So what we do is we take somebody who has shown some ability to manage risk correctly, and we provide them with capital. We give them 100,000, 500,000, up to $2.5 million. Where for more advanced traders, but for the more novice traders, we basically give them capital if they pass certain tests, and those certain tests are basic risk management, where we don't need where they don't treat our money like a casino. And this allows people who have small accounts, let's say they have $5,000, they're a 20-year-old kid, they have a $5,000 account. So instead of them being over leveraged and trying to make a living off of that $10,000, they can actually now have access to $250,000, and they can be self-sustainable. They don't need to have a boss because they just trade they depend on themselves. They eat what they kill, and they don't have to be a corporate slave, etc. And that gives them access to a large capital, in which they obviously the proceeds is 70. They take home 75% of their winnings. We
Oh,
only keep 25%. So not a bad deal for them, and we make money from talented young and just talented people um, that way as well, by providing them capital, and as long as they stay within the constraints of investment thesis and correctly, without being a cowboy and not treating it like they're in Las Vegas. It's an ability for them to earn a lot of money because now they have access to a lot more money. So they basically they have leverage, and it's called fundingtraders.com. It's very simple. Funding traders. We fund traders. So fundingtraders.com is where it is. And if people are interested in starting their journey in trading world, this is one of the probably better ways to do it, rather than if you unless you're getting a job at Goldman Sachs or something, or one of the banks. And but a lot of people did not finish Ivy League schools to have access, and there's no need for that anymore either. So the
yeah.
knowledge is out there. Um, you can be an independent trader, a successful independent trader, and be your own boss for the rest of your life. Which is, and just have your laptop, and you can be, again, you're not bound to a physical location. You don't need to get in a cold car in the middle of winter, drive to some office for an hour in some traffic. None of that. So that's
Yeah.
I enjoy it because when you see people be achieve financial freedom and not be bound by the corporate world, I kind of I get a kick out of it. So to see successful stories like that.
That's awesome. We have one question. I believe it's somebody that's in our inner circle. So, where do you see Apex Bowl in 5 years?
Well, hopefully, the reason I started Apex Bull was a couple of years ago. I was just sitting on YouTube, and I see all these YouTubers offering a bunch of services about trading, and I see that these are 20-year-old kids, so they clearly don't have enough experience yet to be saying preaching what they're saying. All right, because they simply didn't have enough trigger time. So I decided to, and there a lot of them simply were regurgitating very ill advice, which cost people money. So I decided to take Apex Bull and show how I was taught on Wall Street how to do it, to offer that, to transfer the knowledge onto the onto the people, right? And unfortunately, I'm not a very good marketer because I'm a trader first, and I don't have but hopefully we are I'm already building a team of where I do a lot of trading, but a lot of there is a team behind me who can do a lot more marketing. So the reach for the message will be greater. So hopefully in 5 years we'll be reaching masses in a much more effective manner. And
Well,
yeah,
and I like the fact too that the revenue or a portion of the revenue from Apex Bowl goes to support a youth nonprofit. So
yeah,
it actually it's a good thing, showing people how to really trade and, read charts and learn the markets. It's not anything that you learn overnight. Takes I've been trading for over 20 years and I'm still learning, and there's just so much. And thank you for doing that, because there are a lot of people, we see it in stock market space, real estate space, crypto space for sure.
absolutely.
Yeah, people just saying they don't even look like they're barely 12 and they're trying to give trading advice, and I don't know. So thank you for, having Apex Bowl and the prop firm, because I think that's amazing for those that really want to dedicate the time to learn. It's a great experience that
Yes,
you're providing. Yeah.
I appreciate it.
Well, thank you so much. I don't see any more questions, guys. You've been very engaging tonight. Thank you so much, Stan. I appreciate you so much. Thank you for being my first guest and my last guest of the year. And I'm looking forward to having you back on in 2023, because there's a lot of stuff we're going to have to talk about.
Hopefully, I'll be sitting in my gold vault with a lot of gold in it. And yeah, but thank you for having me. It was a pleasure to start this year with you, and to wish everybody a Merry Christmas and a Happy New Year, Happy Holidays. Wrapping this year up, it was not the easiest of years, but we're punching through and moving forward. And I think next year, if we play our cards smart, and this is what we're trying to achieve with these type of educational webinars, uh, we will succeed more and more, and a lot of people will actually be able to make their lives a lot better in 2023 by being smart about their investment choices.
Yeah, absolutely. And my motto is helping people take their money back from Wall Street and invest in real assets. So,
Exactly.
any way that we can do that, from an educational perspective is huge because people need to know. They
Yep.
need to. So,
Absolutely.
yep. All right, guys, we're going to wrap it up. We will see you next year in 2023. Merry Christmas. Happy New Year's. Be safe. Stay warm. It's supposed to be -25 where I'm at right now. Stan's, Stan's sitting pretty warm there, but
Yeah.
going back to Florida, so he'll be even warmer. So bundle up and we'll see everybody in the new year. Thanks so much,
Take care.
guys.
Bye.
Bye.